Welcome back to the channel, guys. As you can see, I got a special guest on the other end, and then for Gareth's channel, I guess I'm the special guest at that end.
Right.
But it's going to be a great discussion because we are on both ends, extreme ends of the spectrum, one might say, at this stage in the market. Where are you sitting at this point, Gareth?
Yeah, so first off, this is great to kind of have an open discussion, and I love these type of things where, you have your views, I have my views, and I think the audience gets to kind of take it all in and then make up their minds, and I think that's always the best way. So for me at least, I'm in the camp where, we've seen the Federal Reserve hike rates so aggressively, and still it looks like they're expected to hike in May. So for me, I'm in the camp that at some point this does impact the global economy and the domestic economy. And I do see us slipping into a recession in the second half of 2023. So that's really where I'm at. I think that the markets right now, if you look at valuations on stocks, the S&P 500, it's at a relatively high level where the markets are not anticipating that. So to me, it puts me in a position where if it doesn't happen, valuations are probably where they are already. And if it does happen, then valuations need to come in. I know you're kind of on the opposite spectrum, so I'd love to hear your angle on this.
Yeah, and I wanted just to say, hello to your audience and to say thank you to jumping on, because I guess with the market continuing up at this point from November, bears are sort of looking like a little bit foolish at this point, but you're here. So I really appreciate having that discussion, especially with guys who they're kind of getting backed into a corner at this point in time, whereas you think later on in the year. But I guess from my end, just looking at the technicals, what I'm seeing is the lows have been in through June and October, and we base a lot of our analysis off timing, so cycles and timing. And of course, then we go to the macro picture of the economy and the real estate. So we look at a macroeconomic economic and real estate cycle, which lasts approximately 18 to 20 years. And we're in the stage now where we're getting that last final leg up, which will impact the stocks, it'll impact real estate going up, it'll impact cryptos going up, but we're in that last stage. So I think we're both similar, where we expect something major to collapse. But I think in terms of the timing, that's the only thing that we differ in. Like, I expect a big recession, but I don't see that coming till after 2026, which you're thinking somewhere in 2023. So I think we have this last leg up where everything gets absolutely ballistic, and then we have this big catastrophic downturn.
And this is just my curiosity, but then what's the catalyst for that next move up, right, where we go into 2026? Because are you thinking that the Federal Reserve then is going to start printing money again by the end of this year, let's say, or are they going to be lowering interest rates, or how do we get there considering how we've gotten to where we are now?
Yeah, obviously a good question, because that's kind of like, well, how is that actually happening? And sorry about my eye, it's been too much. I've been in the surf too much, so the salt water is screw. It looks like I've got pink eye or something.
I can't even tell, so no worries.
All good. How do we get there? We're starting to see signs of us getting there, because I guess when we look back to the macro picture, would you agree that S&P has to go up in order for Bitcoin and cryptos to go up? And if you don't, that's okay too.
I do. In general, even though we've seen decoupling every once in a while, right? Like the banking crisis, for the most part, it's still a risk asset, correct? Yeah, so I do agree with that.
So that's kind of where we look back next. So I have to sort of just mention that, because then for us, in terms of the macro cycle, real estate is what underpins the entire economy. Like, that's where the most money is, trillions and trillions of dollars compared to the stock market. So if real estate is holding up, the rest of the markets will eventually hold up. Yeah, we'll go through cycles like Bitcoin, boom and a bust, but it's getting higher lows. So real estate is still holding up, broadly speaking, definitely seeing it go up at the moment, ever so slightly in Australia and some areas of the US again, after everyone was expecting a collapse. So how do we get there? Well, the banks and the government are starting to bring more credit into the system. We saw that just with that bit of printing. I know everyone's going to point to the 300 billion and the 90 billion. Of course, there's China printing, but the thing that we're seeing now, and it just happened this is what we've been pointing out for a couple of years now, the mortgages are getting longer. Did you see that recently in the US, where they went to a 40-year mortgage? UK went to a 50-year. China is allowing up to 80 years. So not an 80-year mortgage, but you can get a mortgage until you're 80. So what happens there is, like, once you spread out the cost of a property, it makes it cheaper. And so then you start to get this flurry of people moving in. So it's not necessarily that we need to see the government printing more and more money. They'll start to ease the regulations that they'd put in from the GFC, make banking easier again, because they need the market to go up in order to keep everyone happy. Eventually it does collapse, so I agree with you on that. It has to collapse. But I think we have this one last push, like a final pump into an altcoin season, except because it's real estate, these things take years and everyone's going to be scrambling to get on board, and they're all going to freak out and get into the peak. They're going to get into real estate at the wrong time, at the peak, which happens every single cycle. So that's kind of where we're at.
What's interesting, at least from my perspective, and this is, again, I love this fact that we differ in these ways, is that I was thinking about real estate earlier today, and I'm kind of saying to myself, okay, how do you come up with a bull case for real estate? Because if the economy stays healthy, then interest rates in theory are probably going to have to stay higher for longer, which makes it more expensive to buy a house. Now, granted, you're talking about 40-year mortgages, 80-year. I mean, if you do spread out the costs like that, it does bring the cost down, or the monthly payment. But then on the other side, I was thinking, okay, well, if the economy weakens, interest rates start coming down. We've even seen that here in the US. The 30-year has come in because expectations are for a weaker economy. But then if you have a weaker economy, people are losing their jobs. There's not as much job security. And so people would be a little bit more hesitant to buy homes, even with lower interest rates. So I was really, again, I didn't really contemplate the longer 40-year or 80-year type mortgages. But for me, I was having such a hard time figuring out how real estate starts to really gain and go up again, at least in the near term.
Exactly. And it probably won't last long enough. Like, it might just be that few years, because they're giving it everything that they've got. They're in a presidential election year next year. This is the pre-presidential election year, so they need to be seeing that everything is stable. They want to get back into power and all that sort of stuff. And then it doesn't really have that much longer to go. It is real estate. Remember, we're sort of thinking the S&P where shit, it can go up and then it can just dump. And cryptos, it could dump the next day. But real estate, these things take time to play out. Yeah. Exactly. So, and I'm glad that you said, like, we're starting to see a few things on the similar levels, because I feel like a broken record on Twitter, like explaining this over and over again. And everyone's like, real estate has to collapse. It's going to collapse. It's like, you've been in the market long enough.
Yeah.
A low never forms on bad news. Sorry. A low has to form on bad news, I should say.
Yeah.
A top never forms on bad news. It always forms on good news.
Good news.
So
that's right.
The majority of people are saying that we're going to go into a recession and things are going to collapse. And it's like, this is like the most I've ever heard anyone talk about a recession, yet the prices have continued to go up from June and October on the S&P.
Yeah. And I mean, so the one thing about my kind of recession call, and this is where I do differ with other bears, is like, you have the Peter Schiffs of the world calling for like mega depressions and this.
They call it every year, don't they?
Right. But for me, it's not, I don't really see it being a recession that is very deep. It's more like kind of this dragging out, slower economy that it's not a collapse economy. It's like a small recession, but it just lasts for a really long time due to the fact that I see inflation staying slightly elevated and not allowing the Fed to come to the rescue. So it's kind of a weird scenario where I do actually see, like, so you have the 100-year cycle. I don't know how into cycles you are. But like with COVID, you had obviously the Spanish flu. Basically, it was almost a perfect 100-year cycle. And then late in the 20s, now you're coming into the Great Depression cycle as well. And so I think that's where you really get the big issues of the bigger collapse, like really where we could be in store for a depression type scenario. But yeah, at least my recession is more of like one that kind of puts you to sleep. It's not like you don't have 20% unemployment or 15 or 10% unemployment.
Might be like a
you have like 7% unemployment, and things just are kind of crappy, but they're not horrible,
Maybe that's for like the everyday person,
right?
But prices continue to go up. So I sort of think about it in terms of what are we trading and how do we make money? We don't make money off, is there a recession or not? Is one of the headlines saying, we make money, is the market going up or down? Are we shorting or are we longing?
Right.
And so I see the markets go up. But yeah, your scenario could definitely be true, where it's just like, it's not good for everyday people because prices of things are still elevated, that sort of stuff.
Right.
But is real estate going up? At the moment, it definitely is. Is Bitcoin going up? Well, yeah, it's nearly 100% up. Is stock market up from October? Yeah. So that's an interesting point. It doesn't have to be like the roaring 20s where everyone was, it's like great times. This could be like a shitty roaring 20s and prices keep going up.
Right. Yeah, and that's kind of like what I'm envisioning is more like a scenario where you have this kind of, it's almost like the patient's on life support. So the patient's not dead yet, right? Dead would be depression, but the patient's being kept alive, but it's not really it's not a healthy condition. And so that's kind of where I'm coming from, where it's like, okay, we're alive, but we're not really living a good life here. It just kind of is what it is. And then eventually that next phase brings us to kind of the horrible part. But yeah, it's interesting.
That's a fantastic analogy. No, I loved it because I had that in my head 2 mornings ago at like 3 a.m. That exact analogy. I went to write it out when I woke up and I'm like, what was the friggin' analogy? And I've written like dozens of pieces. So yeah, it's literally like keeping someone on life support. Your doctor is saying you've got 6 months to live. I'm the doctor and I'm saying you've got 3 years to live. That's basically the difference here.
Yeah, that's right. So I got a question for you. So how long have you been trading? What's your history? I know you're a surfer, so that's awesome. So do you surf by market close, trade by market open, or what?
So I started as a short-term trading on stocks, commodities when I started out in late 2010. So what are we at? Coming up to 13 years. I did that for a bit. I went into real estate, so I was developing, investing, getting on investors, that sort of stuff. Nothing huge, just sort of like small lots, 3 to 5. So, knockdowns and put up 3, what do you call them? Condos. We call them like townhouses. Did that for a bit to get an idea of what happens in the market. And that's what really got me interested, especially throughout that whole period from when I bought my first property was around 2006. So I'm 37 now. I was 20 at the time. And when I was getting into the real estate, I was trying to figure out, well, everyone tells you when to buy, but how do you know when to sell? And that's what got me into cycles. And so I started following a real estate cycle from 2012, and I've seen it play out throughout this period. Through that time, I was also trading and real estate. I just knew I was in investing. Long story short, I came back to trading in 2016, got back into commodities with my brother, and realized we didn't work together that well when it was in commodities. But 2017, I got into crypto, early 2017, and that's where the trading came back. Did short-term stuff. And now from 2018, I realized I don't have to be that short-term to make those bigger gains. And so I've developed more of a strategy that's based on daily, weekly, monthly, depending on which stage of the cycle we're in. You go daily when it's everything's pumping. Yep. Right now, it doesn't need to be daily for me, for my strategy, weekly to monthly. So that's where I'm at now. I believe you're more into the short term. You're in and out with the day.
More on the swing trade, day trade side. So swing trade, holding for a few days to a few weeks or so, and then I look at the macro view just because it's fascinating and kind of gets me ready to make different plays at certain times. But I really try to exercise that discipline and patience because, again, like you're talking about with the recession, right? I mean, if it doesn't come, you don't want to start investing for a recession if it's actually not going to come for multiple years. You're going to miss out on a lot of gains in the opposite direction. So yeah, for me, it's much more short term, where I'm just trying to kind of hop in and I'm hopping out. For me, I've kind of gotten to that point where it's almost impossible for me to be a long-term investor because there's too many cycles of up and down movement where, it's a good example would be Bitcoin. It's like Bitcoin's at 69,000. You might be a hodler, but if you know it's going to collapse, and I made that call that it was going to go to 20, why wouldn't you exit at 69 and just rebuy at 20 and save yourself a massive amount of loss in that scenario? So yeah, it's
a pretty good call from last year.
Right. Yeah, for sure. So interesting, man. So you trade, when you're trading, do you trade more the S&P then, or do you do individual stocks? Do you trade U.S. stocks? Because you're in Australia, so obviously that could be a little bit of a tricky thing unless you're working all night.
Definitely not working all night. I primarily just trade Bitcoin and then cryptos in the alt seasons. For the S&P, I focus on that a lot because it's part of the macro picture. So S&P, and then a few other charts that I'll look at, home builders and the VIX and those sort of things, just to give me that broad overview. And then also just the real estate cycle. But the money is made in crypto. And then what I do is take that money and go and buy real estate. So,
nice.
This stage, I've got a property going unconditional next week. I think that's what you guys call it over there when you get to that point.
Yeah.
And you can't go back unconditional.
Yeah, you're basically signing on the dotted line there.
That's it. It's all over. You just got to wait it out for the owner to get out then. So, I've got another one doing that next week because that's the stage that I see us going through to. So yeah, that's basically what I do. Money comes from crypto into property. I just try and keep it that simple, and then just focus on the charts and get on with the the education and the YouTube stuff.
Nice. And a lot of people, and this is something I have my own views on, but the dollar, right? We've so many people will tell you the dollar is over. It's the great demise of the dollar. And from my perspective, I agree that eventually the dollar will not be the reserve currency, but I always find that people make it out like it's happening tomorrow. And this is really something that's a much, much longer thing where it's almost untradeable in that respect, in that, you can't invest today for the dollar to not be the reserve currency tomorrow. Because it's just way too long of a trade. I mean, you're going to be sitting in it for potentially years. What are your thoughts on like that?
I'll just put up the dollar chart while we're talking about it there. I don't think the dollar is going anywhere fast at this point. My belief is that the dollar is going down in value, but that doesn't mean it's going to be replaced by the Chinese yuan or Russian ruble or whatever else they come up with. For now, it's still the major world reserve currency.
Yep.
But, what we just heard over the last few weeks, where it's like the US dollar is not being used for trade in France for, trade with Africa. And then Russia's not using it to pay for whatever they buy off China. And China's not using it to pay for things with Africa. It's just been this big whole balloon of fear on the US dollar.
Mm-hmm.
And it was exactly the same thing 6 months ago. Remember that September top? It was everyone pile into the US dollar. The euro was collapsing. The pound was going down. They were going to parity. And everyone was just saying the US dollar is the next greatest thing. It was, everything is coming back to it. But it's just cycles. And we're seeing a lot of fear at the moment, which is why I think maybe we're seeing this bottom forming at the moment. We've got this slightly higher low. Of course, if 100.8 is taken out, then we'll have further downside. That's pretty straightforward. But with that extra fear, maybe we're just going to get another slight move to the upside. You can see we got resistance at 105.5.
Mm-hmm.
That's what you're thinking at the moment? Or you got different views on the gold?
Yeah, so I agree with you in that respect, is that the dollar is definitely hugging. And what I have here, and I don't know if you can pop up my chart here, but basically, much like you, so you have the higher low, you also have this longer term trend line right through here, and we've just been kind of hammering on it. So as of now, anyways, that's your support level. Now, what'll be interesting is to watch if we start trading up into this level. Do we break above it, or does it stall and eventually break to the downside? My guess is eventually it'll break to the downside, but I agree with you that short term, it's very decent odds that we'll have a push up. Way too much bearish sentiment on the dollar. Just like in reverse, you have way too much, for me at least, way too much bullish sentiment right now on Bitcoin. Doesn't mean that Bitcoin isn't going to go eventually higher, but the euphoria out there is definitely a red flashing light for me.
Yeah, like the trend is coming to an end eventually. It's like, will it go from 30.5 to 35 quickly, or will it be 30.5 to 32? Like,
right.
It could be a big move, but it's been up for 5 months.
Absolutely.
You've got to think about that too.
And actually, here, I'm going to get rid of some of these trend lines because it's a little confusing here for people. But one of the things I'm watching very carefully is you basically have Bitcoin now just, number one, piercing the even numbers. So I'm not sure in trading how much you pay attention to even numbers, but I found in trading that, number one, the retail investor puts stops at even numbers. So number one, generally those stops will get taken out because the algos will pierce them, which will then take out the short stop. And ultimately it gets max euphoria, right? When you see all of a sudden a 3 instead of a 2 in front of Bitcoin, 20,000s to 30, it just creates that like, oh, I got to get in now because here goes the run. And those usually denote short-term tops. But then also what I think is fascinating on Bitcoin is that you have so much former trading areas right in this 30,000 level, right? So if we look at the bull market from 2021, when it dumped out, this was the low. So psychologically, and you can see it right over here too, before it broke down, that was a huge level. So it makes sense that right around 30,000 this is going to be a major psychological level for Bitcoin to try to get through. It doesn't mean it can't pierce it, like you said. I mean, it's already pierced 30,000. But for me, this is the big level to test whether or not can it get above this level, and then can it hold above this level. So yeah, it's interesting, really interesting.
Would you say that's one of your invalidation points to the downside? Do you still think 15.5 will be broken?
Yeah, so this is my key level. So for me, if it were to get above this area here, let's say 30,500 is kind of that line in the sand, down sloping line, flat line. So if we were to stay above this for a certain amount of days and really start establishing it as a support level, then I think you have to say that the low is probably in, right? Based on that. Now, if we gets rejected here and we start breaking some of these technical supports, then I do think that things could get nasty very, very quickly, especially if we see the stock market take a big leg down, the risk off trade start to come back in. So to me, this is a huge level. For me, psychologically, like there's got to be so much. I mean, just think about this. Like, think about the people that bought Bitcoin here, and then they thought they were just, going to print money to 100,000 to beyond. And then they came back, they're like, okay, I'm break even. And all of a sudden they find themselves back in. So there's a lot of those people psychologically that'll say, okay, this is a level, I'm back to even after being down 50%. Let me exit the trade at this point. So it just creates a lot of resistance.
Do you remember that from 2019? And we had that support at 5,800, 6,000? I was in the camp too. I thought we were going to get some resistance there, and the thing just shot straight through to 8,000. I was like, oh, yeah. So obviously, we're both prepared for that, but like logically speaking, you would expect something like that could occur.
Absolutely, absolutely. So are you in the camp that the low is then in on Bitcoin already, and that you think we'll get through this area, or you're thinking you'll also pull back, but the low is still in?
Yes, I think the low is in. We'll have a pullback. I just don't know where this top is. So wherever the top forms, then I'll start to look at 20% to 50% to the downside. That's typically what it's done in the past. But if it only gets to say 32, I doubt a 50% pullback to 16,000. So I think it would be a more shallow pullback, or a trading range like it did in 2015, 2016, where it just sort of traded sideways, broke out, traded sideways, broke out, traded sideways, rather than 2019 where it's sort of, in this massive pump, and then over the next 6 months went from 14 to 7. Like it's just going to depend where the top comes in. But I do think the low is in based on, I do a lot with volume. I don't know if you focus on volume at all.
Not as much, so I love that you do.
So the volume for lows, you can see here, this was November. That's the, I'll put it on candle so it makes it a bit fatter for everyone. Extreme volume. So I'm on Coinbase. We know that Coinbase had some pretty significant volume in the last several years. And prior to that, it wasn't one of the primary exchanges. But extreme volume at lows when the market couldn't push any lower typically means that the low is in. You can see we had the capitulation, and the price really didn't go that much further from June. This was the FTX collapse, and that was the Celsius Voyager BlockFi collapse. And then the price pretty much on big volume again broke back to the upside and took out all of that fear from the last 6 months. So if we do get a pullback, I want to see where the high comes in first, maybe in that mid 30s, and then we'll have a look to somewhere in the high 20s to low 30s as a pullback range. But I mean, bottoms have just, they always, almost always, at least in cryptocurrency, form on massive volume. You can see the COVID crash, and it starts to make sense when you think about it. There's a lot of trading going on. You've got retail getting extremely fearful. FTX collapse, the biggest thing that we've seen, almost like a black swan event for crypto. At that point, lots of people selling, lots of smart money buying up. That's why the price came to a stopping point, like stopping volume. And then it turned around, like it just couldn't push any lower. So I take a lot of the mainstream narratives and the market sentiment, because remember after FTX collapsed, it was, they started targeting Binance. Binance had to collapse. Crypto.com had to collapse. Qcoin had to collapse. They went after, I forget now, but they just basically go after everything, and it happens every single time. And it was only 4 months later, which SVB collapsed and Silvergate collapsed, that you see the news go after the next bank and the next bank and the next bank, and Bank of America is going to go down and JP Morgan is going to go down. It's like, okay, it's 1 month on, didn't happen. So when I see that enough times, it's like, it just really starts to cement that bottom's probably in, because they don't have any more fear left. Like the narrative has run out, and they don't have any more ammo left to scare people.
Do you think that in 2020 we had that flush that took us back to the lows on Bitcoin, but technically that was the black swan event of COVID, right? So
Yes.
Was that a natural occurrence that we would see or in the next cycle, or are you thinking that?
No. Well, it's a black swan, so no one ever knows. And the thing I hate at the moment is that everyone just calls everything a black swan. It's like,
Right.
if this comes up or if that comes up, it's like, when was the last
There's always
black
going to
swan?
be one then.
Exactly. Like the last black swan to COVID was when? The fat finger in 2011?
Maybe, yeah.
Yeah,
the
that
flash,
was just.
flash crash. Yep, I remember that.
So I can't really think of any other black swans that happened in the market, prior to that. So that was 9 years earlier. There might be one, you guys can let us know. But, when you think of black swans, they because it's so fresh in everyone's mind, they're thinking, well, there has to be another black swan and another one. It's like, guys, we possibly just saw FTX as a black swan. You got two
Right.
in 2 years.
So one of my big questions would be then, and this is something I struggle with, is when you're dealing with crypto, and I traded in the beginning of my career through the .com bubble, and I watched, penny stocks go up hundreds of percentage points almost daily, just like Doge did, just like SHIB, just like so many of these other ones. So like, for me, it's hard to imagine how we could be at a end of the bear market cycle in crypto without a bigger washout of these crap coins, right? Of so many of these basically zero utility coins. And so, I mean, that's something that I struggle with, is where I'm like, listen, if the mental cycle, the psychology of investors drove the .coms, it drove the crypto markets, and you haven't seen that. People are still buying NFTs. People are still buying, these crap coins, expecting them to go back up. So how do you come to terms with so many coins being out there and maybe a new bull market in crypto?
I saw a lot, like if we measure a lot of the altcoins, they went down over 90%. So even the likes, I remember I was watching FTM, I think that thing went down 95%. So a lot of them have dropped that far. It just doesn't feel like the same thing it felt like in 2017, where it just went slam down. But I think maybe they'll just die out.
So you think just more like, does that come from a sideways move in crypto where, Bitcoin just goes sideways for a long period of time and those kind of get slowly dumped because people are bored with them? Type of thing. That's
definitely possible. Like we see Bitcoin jump up, it trades between 28 and 35. Any down day of Bitcoin that might go 1%, altcoins will go 3 or 4%. And so over that period, they just get bled out, slow, long death, which when I think about the market sentiment, like that's what some of those investors need. Mm-hmm. They're not going to see it, and they're just going to see it slowly die off. And then they'll see that one day where Bitcoin's up 4% and their crypto's up 2%, and they'll think that they're winning. we both of us know they're not winning at the end of the day, and that will take them out. I mean, anyone can prevent that. I'm not trying to have a go at them. They just have to watch a chart and, identify where the strong ones are and the weak ones are. Yeah. But I think is a very high possibility. And especially even if they do go up, I don't think they'll outpace Bitcoin in this first part. When Bitcoin dominance takes over, and we're seeing it break out today.
Yeah, and one of the things I keep on watching for too is the regulation, right? When do we see the regulation be unveiled for the crypto markets from the SEC? We're seeing, I think Binance got sued recently. I mean, there's so many different lawsuits that are being pushed out, but I want to know the regulation. Like for me, that's one of the reasons why I can't put a ton of money in Bitcoin or any cryptocurrency yet. I mean, I certainly have small dabblings. I do swing trades. But for me, it's like, okay, well, if you don't know the rules of the game, how do you play that game, right?
I guess I'm not overly concerned. Mm-hmm. Like, do you still think crypto is going to trade regardless of what happens with regulation?
I do. I just wonder how do altcoins, more than anything, Bitcoin to me is fine. In Ethereum is fine. It's more the question of what happens when you have to have quarterly reports from some of these. I mean, when the books get opened on some of these crap coins and you get to see behind the curtains, what does that do to some of them? Does that cause a panic? Do we see I mean, maybe that's one of the reasons a lot of these will go away. Maybe all of a sudden you get this type of like pull the curtains back, and then investors are finally like, wait a minute, there's nothing there.
Exactly. And that's possibly where they get dumped. And so when you go into this next narrative pump, you know, we had DeFi in 2020 and then DeFi was like nothing in 2021. Maybe the next narrative pump is sooner than that altcoin season. And it's, I'm a regulated AI, meta, whatever thing you want to add to it. And we have a pump on regulated coins. I mean, I know lots of people in the US, we probably shouldn't say it, but they'll use VPNs and trade wherever the hell they want. That sort of stuff goes on. So I guess I wasn't overly concerned with the regulations, and how much it came up in that psyche and the narrative of the media almost reminded me of China banning Bitcoin. China banning Bitcoin. I'm like, oh, okay, we've heard it, but why is the price going up? It obviously doesn't mean anything to the market. Was there any other macro stuff you want to look at in terms of Bitcoin with that level where it gets invalidated and then to the downside? Like, you know, if we don't break that level, what does it look like?
Well, just looking at the charts, I mean, so basically, at least for me on the charts, this was resistance right here around this 28,700 level, right? We kept on piercing it, and then finally we've moved it through it. So what's interesting is, and you know this from technical analysis, is when you break resistance, it now becomes support. So now on the way back down, let's say it gets rejected at this 30 and change level, this now becomes support. If it gets through there, then this level now becomes support. So there's a bunch of supports that were established because of all this sideways consolidation. So it's going to take a hefty sell to get us back through that. That's where things get more interesting. If we do get rejected and we get through this area, you then start trading towards the 25,000 level, and eventually you can retest some of these lower levels. But for me, yeah, I mean, right now, I'm a trader that is very focused level by level. So I'm looking to see, okay, well, what happens here at 30,000 and change level? And if it gets rejected, do we break this level? If it breaks, well, then the next level is right here. And I'm just kind of a step-by-step trader in that respect. And again, that's part of the shorter term mindset of what I do. It's just like, okay, that's been broken. Now you look for the next one. And if that one doesn't get broken, then you look and kind of focus on that.
Play it simple. You know, it works long term when you just play it simple. So using that same analysis, if you went up to, do you look at the weekly and the monthly, or you just prefer to stay daily?
No, I do look at the weekly. Absolutely. So I'll show you. I really
want to hammer home some of the bear stuff, because I've been told that I'm way too bullish and I need to be humbled, and I want to.
I've been way too bearish and I need to be humbled.
The market will always humble us. So I really want to see, like, am I missing any of the points here? So yeah, the next thing in terms of the bearish outlook for the weekly.
Yeah. So again, weekly chart shows the same thing. You have all this kind of sideways chop here, all this kind of area here. The one thing I would say is if we do break 30, the next big level for me would be this area here, this kind of retrace to this area where you have these lows connected to these lows. And that actually brings us to maybe, I mean, you know, kind of the best case scenario for me would be a move up to 43, 44,000, at least in the near term. So that would be the bull case. To me, again, you know, I look at this bigger chart, and this happens to be the midpoint of this M pattern, and you can even see the A on this chart, right? Here's your M, and then here was your little A pattern. So I mean, it's a classic MA pattern. And then this is just a retrace to that middle point, which is so common. Like if you could look at stock charts, commodity charts, all these charts, when you get this pattern and it retraces, this tends to be a major stopping point in the retrace of the bounce. And also, just one thing, and I'll just point this out before you say something here, is that the other thing to look at too is, I mean, the bullish sentiment in Bitcoin is bothersome to me, because I've never known something to make a bottom where people get so bullish so quickly. And that's also something that kind of concerns me. And when you look at this bigger chart, right? I mean, it's a great bounce. Don't get me wrong. I mean, Bitcoin's up 100% off the lows. But let's not forget, in 2018, we hit 3,500 and we bounced back 300% to like 10,000. And that was still a bear market. We still, you know, ultimately stayed in the lower ranges for quite some time before we really broke out.
So maybe it's part of the terminology that we use, because I would say once that low is in say December 2018, that's the beginning of the bull market, and bull markets are made up of certain stages. You got that first stage where everyone gets excited, but the bears will have their day again and will come back 20 or 50%. and then it goes through that next cycle, and everyone's sort of trying to figure out, is it actually bullish, is it actually bearish, that sort of thing. So this low was in November. It wasn't until I think it was January, that big green bar where it finally broke out. So we're down there for about 6 weeks. So everyone was still quite bearish at that point, but we started putting those little higher lows. What I was going to say earlier was that yellow line you drew across around that 31,000 level. I get that often as well. I was wondering with your members and students and that with the TA, do they think it's only suitable on Bitcoin? Do they understand that it's across the board? Because I've had to say that you can use this across any chart.
Yeah, that I think is the coolest thing about it, is that technical analysis is so universal. So I always remind people that, if you learn technical analysis, you can trade anything as long as it has volume. That's kind of my caveat. It's like, if you're going to trade a stock that trades 10,000 shares a day, one trader can mess that whole thing up. But if you're trading things liquid like, oil or Bitcoin or Apple stock, I mean, charts are charts, right? And the thing that people have to remember is that when you're looking at this chart, we're not really trading a chart, we're trading human emotion, right? We're trading buyers and sellers, and they're reacting to greed and fear. And so that's why it's so universal, is because the same thing, greed and fear, occurs in oil, in gold, in stocks, all of that stuff.
Yeah, gotcha. Yeah. I wondered, because that's what I've had to say too. People will say, well, what about for stocks, or what about for other cryptos? And you realize that, hang on a minute, the TA, it's the rules that work on the chart. And you're exactly what you said. You're just trading human emotions in the chart. There were two levels that you brought up. You had 31,000 and around that mid 40s. It's interesting you brought those levels up, because they're also my levels.
Oh, cool.
42, because it's the halfway point. So it's on log. If I take it off log, you can see there. So the halfway point between the low and the high is 42. We often look to 50% levels for exactly some sort of resistance. And right now we're coming up to another one at around that 31.8, which was also peaked just there. So they're going to be critical levels. If the market can break through this, let's call it 32 as a round number, then it has to close above that. Of course, we always say it's closes, not just wicks, but that's going to be a good base here to then attempt any of the high levels, whether it's high 30s, whether it's the 40s, whatever it may be. But that 31 and a half looks pretty good. It's also a significant level. So I've talked about this being basically the 15K bears are dead. So I'm watching, this is what is called a overbalance in time and price. Have you ever heard of that? Mm-hmm. You have?
Yes.
Oh, lovely. Well, then you completely understand what I'm looking at here then. It's right about there. So this was the biggest range to the upside during the bear market, if you say that this is the bear market. This range now is just a few $100 short of overbalancing the price, and it's definitely overbalanced the time. It's gone longer.
So you say, I call it a measured move, but same thing. Yep, absolutely. Very cool.
But the price, it's not a percentage, it's the dollar value, and the dollar value is nearly moved the same amount from that. So measured move in terms of price, but a lot of people don't follow time. And this move here in time was, I think it was 9 weeks. 9 weeks. Whereas now, obviously, we've been up way more than 9 weeks. We're at our 20th week. So I think it's coming to an end, and we just need to get to that 31K level. And you can see a lot of resistance coming out at 31, 32.
Nice.
So
I think today we hit 30,500-ish right today. So we're very close to 31.
Yep. And that would then be, that's your invalidation. That's the overbalancing time at price. So I think that anyone waiting for a break of 15K, you can basically cross that off your list. And, sometimes I go as far as to say, I don't think 19.5 is going to be broken, just because of how severe the news was on that low, and then how big the reaction was from it. Like, banking collapse, that was just across everyone, the news across the world, Credit Suisse, Deutsche Bank, like everything had to collapse. And, just as a bit of a fun move here, was Credit Suisse's CS, I think. Yep. I mean, the news says it's down 50-60%. All I did was just bring up a chart, which you would do the same, and go, hang on a minute, it's been down for 16 years, you fools. It's a shitty company.
Yeah, I know. It's really an amazing chart to look at. Like,
Yeah.
to think about that is remarkable.
16 years down, and they were worried that the banks are all collapsing. It's like, before that news came out,
It was telling you.
it was telling you that there's
Yeah.
just it's a dead man walking.
Yep.
Absolutely wild. I guess the last thing I just want to have a quick look at was the time frames. So I'll just mention that was the time frames of the 4-year cycle, and I'll get your views on the 4-year cycle in a sec. I guess I'll just mention the 4 years essentially is looking at a low to a low. It doesn't have to have a blow off top. It doesn't have to have a rounded top. It doesn't have to be anything like that. It just needs to have a significant low to a significant low. And the timing, sorry, I've got a few things on there, but the timing is essentially about 1,000 days to 1,100 days up,
Yep.
and about 360 to 400 days to the downside. And so we've hit that mark on the head in November. And so if we look out to about 1,000 days now, the next peak somewhere around summer of 2025.
Interesting.
So if this came back down, it would put all the counts out, which is not impossible. Counts can get put out, but at the moment it's sort of been working pretty well to those time counts. So if I sort of measure that, around 1,000 days is there. If we go to 1,100, somewhere towards the end of
So one of the things that I'm a huge cycle person. I follow the lunar cycle, solar cycle. I follow a lot of that kind of stuff and look at it in relation to charting. But like with crypto and Bitcoin, my struggle with the cycle, and whether it's the 4-year cycle or whatever, is saying, okay, the 4-year cycle, all you have to go with is since 2009, which was when the Fed started quantitative easing, right? So this is technically that first bear cycle without printing money. Does it change? Is it, and to me, that makes me wary of it. It's like, okay, well, if everything was the same, yes, it makes sense that you're going to have the same cycles, but you take away something as powerful as the trillions of dollars that we're flooding in. How does that affect the cycle, or does it not affect the cycle? And I think that's the big question.
I mean, because of the cycle analysis, I would say it does not affect the cycles. It's like the seasons never change. It's just how severe are the seasons. So that's what I'm saying. The low to the low, this could be the low to the top, right? And then you get the next low. Doesn't mean that the high has to go higher. It's just, true. Is it a significant high? And is there going to be a significant low? So we're just measuring the low to the low. That's basically what the 4-year cycle means here. Other people have got other ideas about a 4-year cycle, with the halving and all that sort of thing. But this top could have come in at 20K, and then we fall to 3K, and that's still a 4-year cycle. So that might happen. That might happen after this next top. Maybe this next top we go to, I don't know, 90K, and we come all the way back to these levels here at 50 or 60K. Just as like a worst case scenario or something like that. And then the next 4-year cycle only barely goes up to where that previous top was, and then you get the next low somewhere out here, which would all work in with like, the depression after 2026. We have a pretty crappy 4-year cycle for the majority of people, and maybe the top comes in within the first half of the cycle. So all it means is you've got 2 years on this side and 2 years on that side, and the top comes in the first 2 years. That's a weak cycle. Whereas all of these cycles, the top has come in on the second half of the cycle, which is strong because you've got more bullish move and then less bearish move. So if this happens, very, very, very weak. If that next top comes in the first half, you can expect that you'll see an equal low or lower low to where that next 2025 or 2026, whatever that low is.
Nice.
So that's the 4-year there.
Very cool, man.
Yeah, that's what I look at when it comes to those cycles, and I think that's what will happen because of the real estate cycle as well, where we get this blow off top in. Actually, I've got a little chart here. It's my real estate. Yeah, that's what we're expecting through this period at the top, and then a dump into those next few years. So if real estate's dumping, the stock market will be dumping, Bitcoin will also be dumping. It's all going to be coming down. And I think that'll catch a lot of people off guard, thinking that Bitcoin always goes to new highs. It's not always going to go to new highs.
Yeah, I agree with that.
It'll suck enough people in here, and then it will spit them all back out in that next move on the way down, I think.
Yeah. Cool.
Yeah, man.
Wonderful, man.
Anything you want to add?
No, this has been this is the types of chats that I love. So I love us kind of just back and forth and throwing things at each other and stuff like that. So very cool. I appreciate the time tonight. This has been great.
Likewise, I really appreciate it. So if you're watching this on my channel, I'll have Gareth's links down below.
Same thing over here. You just give us the links and we'll throw it up for you. Absolutely.
So yeah, it'll be on Gareth's channel and my channel as well. So thanks very much, mate. You can subscribe to us on YouTube, on Twitter. We're always posting over there, and we'll have all of our any other links that we have will be down below. I reckon we try and do this again in another several months' time, see how everything's lining up.
Yeah.
It's always been a fun discussion, especially when we're on two different sides of the equation. Interesting and always learning. So yeah, I really appreciate it, mate. Thank you.
Yeah, I do too. Thank you for putting it together, and I look forward to a couple months revisiting our analysis.
Cheers. All right.
Cheers.
Peace out, guys. Thanks, everyone.